All right, let's get right into it. There's one massive question hanging over the entire tech world right now. Is this AI frenzy we're all living through just a replay of the dot-com bubble? I mean, the skyrocketing stocks, the insane valuations, the nonstop hype. It feels pretty familiar, doesn't it? So today, we're going to dig in and see if history is actually repeating itself.
So yeah, this is the big one. Are we partying like it's 1999? You hear this question everywhere, from Wall Street to Silicon Valley. But is it really a fair comparison? Or is there something fundamentally different happening this time around? We're going to break down both sides of this argument. First, looking at all the evidence that screams bubble, and then hitting the counter-evidence that says, nope, this is a whole new ballgame.
Okay, to kick things off, let's just focus on one single number, 42%. Right now, that's how much of the S&P 500's total value is concentrated in just the top 10 stocks. That is a record high. And to give you some perspective, back at the absolute peak of the dot-com craziness, that number was only 29%. So we're way beyond that now. An imbalance like this, well, it's a huge red flag for a lot of people.
So with that kind of top-heavy market as our starting point, let's really build the case for a bubble. The evidence is actually pretty compelling, and you'll see that the echoes of 1999, well, they're getting pretty loud.
First up, you just got to follow the money. In the first quarter of 2025, a jaw-dropping 58% of all global venture capital, all of it, was shoveled into AI startups. That is an absolutely unprecedented amount of cash chasing one single idea, basically crowding out every other sector. It is, the classic sign of speculative, bubble-like behavior.
And hey, you don't even have to take it from me. This quote is from Ali Quadzi. He's the CEO of Databricks, a massive player in the AI space. And he literally said, "We are at peak AI bubble." But here's the kicker. He said that while his company was in the middle of raising $10 billion at a $62 billion valuation. I mean, the irony is just perfect. It tells you that even the ultimate insiders know how frothy things are.
And let's do a little side-by-side of the poster children for each era. Pets.com from back in the day and OpenAI today. As you scan down this table, the parallels are kind of spooky, right? Look at profitability, or the lack of it. The core asset is built more on promise than on actual concrete results. But the number that really gets me is at the bottom. Valuations as high as 1.2 times $1 billion per employee. That level of speculation is it's really hard to wrap your head around. And look, this isn't just some fringe opinion. A recent survey showed that 54% of professional fund managers, we're talking about the people who manage billions and billions of dollars for a living, they believe that AI stocks are firmly in bubble territory. When more than half the pros are worried, that's a signal you probably shouldn't ignore.
Okay, so that's a pretty convincing case for a bubble, right? But it is absolutely not the whole story. So now we've got to pivot and look at the counter-argument, because there are some really fundamental, data-driven reasons to believe that this time it genuinely is different.
So one of the strongest arguments against this being a bubble comes down to a metric called the price-to-earnings, or PE ratio. And all that is really is a way to measure how expensive a stock is compared to how much money it's actually making. At the dot-com peak, the tech-heavy NASDAQ 100 was trading at a dizzying 60 times its expected profits. Today, that number's around 26. Now that's still not cheap, but it suggests that today's valuations are way more grounded in reality than they were back in 2000.
And that leads us straight to the real difference maker, profitability. Back in 2000, the boom was all about unproven startups. Get this, only about 14% of tech companies going public were actually profitable. Today, the AI revolution is being led by established, cash-rich giants. We're talking Microsoft, Google, and especially NVIDIA, which is just a cash printing machine with an unbelievable 53% net profit margin. These aren't just speculative debts. They're some of the most profitable companies the world has ever seen.
I absolutely love this analogy because it just perfectly captures the difference between then and now. So the dot-com bust, it left behind something called dark fiber, literally thousands of miles of fiber optic cable that companies laid in the ground but never even turned on. It was a massive monument to wasted investment. Today, there are no dark GPUs. It's not a thing. Every single AI chip that gets made is being snatched up and put to work immediately, running at full capacity. This is real, intense, immediate demand, not just a bet on the future. And here's the proof of that demand in action. This isn't just hype about some future tech. AI is a real tool that's already getting woven into the fabric of the economy. As you can see here, by 2024, nearly 80% of organizations were already using AI in at least one part of their business. It's already here, it's solving real problems, and it's creating real value.
So we've got two really powerful, really convincing arguments that completely contradict each other. One side is screaming bubble, the other is insisting this is a legitimate technological revolution. So what's the verdict? Well, the reality, as it so often is a lot more complicated than a simple yes or no.
So to really get to that verdict, we have to introduce this key idea, the AI supercycle. And all this means is that underneath all the day-to-day market chaos and speculation, there's a genuine long-term technological shift happening. It's a transformation that's going to drive productivity and growth for years to come, completely separate from whatever the stock market is doing this week.
So here it is, the crucial takeaway. It's not one or the other. We're actually seeing both things happening at the exact same time. There's absolutely bubble-like speculation going on, especially when you look at the valuations of some of these private AI startups. But that is happening right alongside a very real, very legitimate tech supercycle that's being driven by those hugely profitable giants we talked about.
You know, history actually shows us how this can play out. The dot-com bubble absolutely did burst, no question. But the infrastructure it left behind, all that dark fiber, it paved the way for the giants of Web 2.0 like YouTube and Facebook. Today's massive investment in AI infrastructure could be doing the exact same thing, laying the groundwork for whatever that next incredible wave of innovation is.
And the scale of that investment, I mean, it is just breathtaking. Projections are showing that almost $7 trillion is going to be spent on data centers alone by 2030. This is the physical foundation of the AI supercycle being built right before our very eyes. And even if some of that money gets wasted in a speculative frenzy, the sheer scale of it ensures there's going to be a lasting legacy.
Okay, so you've got these two huge forces, the bubble and the supercycle running at the same time. So what in the world does this all mean for you? Let's try to distill all this down into a clear, simple takeaway and separate that market hype from the technological reality.
If you're an investor, the message is really to be discerning. You got to look past the hype and find companies with real profits and solid fundamentals. And you have to be aware that with the market being so concentrated, you might not be as diversified as you think. But if you're a business leader, the message is totally different. Ignore the market noise. The technology is real. You need to focus on how AI can deliver a measurable return on investment for your company right now.
And that just leaves us with this final thought to chew on. The dot-com crash, for all the financial pain it caused, ultimately cleared the path for the titans of the modern internet. So, even if the more speculative parts of this AI frenzy do collapse, the real question isn't whether the tech will survive. The real question is, what incredible new things are going to be built on the powerful foundation that's being laid down today?